Maybank Berhad, also known as Maybank, was established by Kuteport in 1960. Maybank is the largest provider of financial services in Malaysia, whereby it has major operations throughout Southeast Asia, and is now the largest company on the Malaysian Stock Exchange in terms of market capitalization. It is ranked first among Malaysia publicly traded corporations and among the top 500 companies in the Forbes Global 2000 ranking of the world's leading companies. Furthermore, the retail financial services of Maybank are organized into four major business domains, which are daily banking, financial protection services, retail financing and savings, as well as investment. Maybank also offers a wide range of products and services, including commercial banking, investment banking, Islamic banking, leasing and hire purchase, as well as internet banking. For example of Maybank products include Maybank Islamic Personal Financing I, Murabahah Vehicle Term Financing I, the Mass Savings Account, and the Sukuk Prihatin.
The key factors of setting up branches in current locations are fast signaling and coverage zones for the internet, corner of the road where clients may easily enter and depart the branch, position near downtown businesses like restaurants, groceries, and health care where it is always crowded. Besides, it's located near areas traversed by public services and close to the major road, which can be visible to everyone passing the road.
During pandemic, Maybank established sama-sama local platform on Maybank to You to help local communities such as local hawkers and small grocers. The purpose of this platform is to help their business by leveraging technology to sustain their income due to movement restriction. Moreover, they are pushing towards digitalization and enhanced experiences to support new ways of working and connecting with customers. They did not have problem in adopting split operation and mobilizing work from home. And also, customers don't need to visit their physical branches and expose themselves to COVID-19 due to digital platform provided by Maybank. During endemic period, one of Maybank's key priorities is to reinforce their shareholders' confidence. In 2021, Maybank successfully obtained commendable performance. They managed to increase their net profit by 24.9%, and the full year dividend increased by 11.5% from 52 to 58 cents per share. They also ensure their employees healthy in all aspects, including physical, mental, and emotional. They actively encourage their people to be vaccinated and allowing a hybrid work environment by allowing teams to be split between office and home.
The first risk faced by the Maybank is credit risk. Credit risk is the risk of loss of principal or income resulting from an obligor or counterparty inability to fulfill contractual commitments in the with agreed condition. For instance, it's come mostly from underwriting, lending, trading, and investing activities that take place both on and off the balance sheet. So, Shahira, how can we manage credit risk?
How to manage credit risk? Although banks cannot be completely insulated from credit risk depending on the nature of its business model, firms can reduce their exposure in a variety of ways. Since industry or issuer degradation is frequently unpredictable, banks reduce their exposure through diversification. Diversification is a way to lower risk by spreading investment across different types of financial instruments, industries, and other groups. It tries to get the best return by putting money into different areas that would respond differently to the same event. As a result, banks are less likely to become overexposed to a risky sector during a credit downturn.
Second, operational risk is the risk of loss from inadequate or failed internal processes, people, system, or external event. For example, customers are inconvenienced as a result of careless work practices by bank workers, inefficient management, and many more. So, how we can manage an operational risk?
We can manage operational risk by giving the employees training to be motivated and confident to accomplish their work with more quality and give their best to the customer. Other than that, an individual who has received enough training will be more familiar with the duties of the position and hence need less supervision. As a result, less time and effort will be wasted. Training promotes efficiency and productivity among employees. Hence, there will be less wasting of time, money, and resources if personnel are adequately taught.
Third, the majority of bank market risk come from capital markets because of equity market, commodity, interest rate, and credit spread volatility. Banks are more at risk if they invest in capital market or trade a lot. So, how we can manage a market risk?
Ways to manage market risk is to have a diversified portfolio of investment in order to reduce the impact of market risk. Hedging their investment with other investments that are related to them in the opposite direction is another way that Maybank reduce their investment.
Next, technology risk originates from the use of computer system in bank operation, account reconciliation, and information storage and retrieval. Defective, inappropriate, or old technology could cause a danger. For example, a problem occurs when a customer cannot use Maybank to you. In addition, unauthorized users may hack their financial system. So, how we can manage it?
So, to manage technological risk is the Maybank Group has designed a technology risk management framework for use throughout the group. An organization's technology-related function must be identified, assessed, and remedied in accordance with the framework's requirements. This has all been done to ensure that Maybank's clients and business unit get the best possible service, as well as to protect the company's image.
Liquidity risk is the ability of a bank to get cash to meet its funding obligation. If a bank takes a day to pay some customers, other depositors may withdraw their money because they no longer trust the bank. This makes it harder for the bank to lend money, causing a bank run. So, how we can manage it?
So, on how Maybank manage this risk, Maybank should set up a strong framework for managing liquidity risk. The board of directors of a Maybank should be accountable for the effective management of liquidity risk and should establish a liquidity risk tolerance that is compatible with its business plan and function within the financial system. The board of directors should devise a strategy, policies, and procedures to manage liquidity risk in accordance with the risk tolerance and to ensure that the bank maintain enough liquidity.
The better capital adequacy ratio must be more than 8%. So, CAR in 2020 is 12.36%, which is better than 2020, which is 9.97%. This shows the Maybank ratio for the years 2020 to 2021 does meet the ideal Camel ratio because the ideal ratio must above 8%. That means, the greater a bank capital adequacy ratio, the greater its ability to withstand a downturn in the economy or other unanticipated losses. Next, the better total capital to total asset ratio must be more than 4 to 6%. So, the total capital to total asset ratio in 2021 is slightly increased by 8.89%, which is better than in 2020, which is 8.80%. Therefore, it indicates that in 2020 and 2021, the ratio is more than 4 to 6%. That means, Maybank has sufficient capital to fulfill its future liabilities.
Non-performing loan to total loan ratio measures the effectiveness of a bank in receiving repayment on its loan. Based on the Camel decision criteria, NPL ratio below or equal to 1% is the best. NPL ratio for Maybank in 2021 is 0.89%, lower than 1.10% in 2020. This indicates that Maybank has a low amount of non-performing loan or loan that are in default in their loan portfolio. Next is allowance for loan loss ratio. It is an indicator of how protected a bank against future loan losses. Based on the Camel decision criteria, the ratio above or equal to 1.5% is the best. Allowance for loan loss ratio for Maybank in 2020 is 2.42%, while in 2021 is 2.28%. This indicates that Maybank are able to cover the risk of loan losses.
There are two types of calculation in management quality, which the first one is the average of historical asset growth rates. It indicates the rate at which a corporation has increased its assets. Hence, the higher the rate, the better. Based on the analysis above, Maybank's asset growth rate over the past decade has been 7.01%, indicating that the company has effectively managed its business to boost its assets growth by 7.01%. Next is average of EBITDA growth rate. It refers to the percentage growth, if any, in EBITDA for the current year relative to the prior year, as decided by the committee from time to time. The preferred rate is between 10 to 15%, but based on the data presented, Maybank EBITDA growth rate is negative 4.96% below a good rate. Therefore, this suggests that Maybank's main businesses are unprofitable and it must reduce its daily operating costs and expenses.
Next, earnings quality. First, interest income margin. According to the ratio, the interest income margin is relation of a financial institution's net interest revenue from credit products such as loans and mortgage. As we can see, for 2021, slightly increased by 2.3 better than the year of 2020, which is 2.1. Thus, the company is measurably better than the average bank, but not quite outstanding in all respects. Second, cost to income. According to the ratio, cost to income is utilized in measuring bank's profitability. It is demonstrate the effectiveness with which the bank is managed. The lower the ratio, the better, as it signifies more bank profitability. As we can see, the ratio for 2021 and 2020 a slight difference, which is 45.3% and 45.4%.
Next is liquidity. According to the ratio, the customer deposit ratio for 2020 is 64.92%, while in 2021, it is 66.31%. This shows that the Maybank ratio for the years 2020 to 2021 does not meet the ideal Camel ratio because the ideal ratio must be more than 75%. Thus, Maybank might not be able to fulfill its immediate short-term obligations with its current assets. Next, loans to customer deposit ratio. According to the ratio, the loan to customer deposit ratio for 2021 is 82.82%, which is only slightly better than in 2020 at 82.87%. It shows that the Maybank ratio for the years 2020 to 2021 is closer to the ideal ratio because it only exceeds the ideal ratio by slightly. The lower the ratio, the better, as it means banks have enough liquidity to cover any unforeseen fund requirements. Thus, Maybank still has a high capacity to fund its asset base from deposit.
The first strategy is on digital banking. In light of the COVID-19 pandemic, businesses are looking for ways to run their operation more safely, and users' habits are shifting toward cashless transactions. In this new normal, virtual banks have a great opportunity to succeed. During the pandemic, the bank has reduced its branch operational hours, temporarily closed some branches, utilized non-face-to-face interaction to avoid being contagious, and promote a shift toward digital banking. For Maybank, they have improved their features to make it convenient for their users to use them daily without any problems. For example, saving account can now be opened online and digital through Maybank to You, contactless payment using QR Pay and top up any e-wallet or food deliveries, groceries transaction, and many more.
Maybank also offers financial relief to customers, which is loan moratorium. A loan moratorium delays the payments of loan installments. A loan moratorium may help us withstand a financial crisis and scenario like a pandemic COVID-19. The temporary loan repayment break may help financially struggling borrowers assess their situation and plan for the future. During the MCO, banks are committed to helping individuals and SME, including micro enterprises, with repayment assistance package. Maybank offers convenient channels for opting into the 6-month car loan moratorium, and Maybank is also offering a 50% reduction in monthly payments for 6 months for customers who prefer it.
Next is supporting stakeholders at their time of need. Maybank stay beside their customers and communities in their time of need. They launch a social impact deposit campaign through Maybank Islamic under their Islamic fixed deposit account. During the campaign, Maybank contributed every deposit made to a social impact assistance account, and it will be used to provide financial support to those whose income have been affected by the pandemic. This also serves as a key relationship strategy.
After all is said and done, Maybank appears to be a bank that does its job admirably. Maybank's ability to survive an economic downturn or other unexpected losses, as well as sufficient cash to cover its future liabilities, has been demonstrated by this analysis. As a result, Maybank has fewer loans that are non-performing or defaulting, which putting it in a better position to collect loan repayments from its lenders and cover the potential loss from loan defaults. However, the result of this research also show that Maybank has some difficulty performing its immediate short-term obligations, with its current assets and managing its operating expenditures and expenses, which leads to a reduction in profit.